The government today agreed to 6-month mortgage holidays and another $6.25 billion for a finance guarantee scheme for small and medium-sized businesses. So where did the money come from and how long will it last? Well, joining us now from self-isolation via Skype is economist Shamubeel Eaqub. Good evening, Shamubeel. Lovely to see you. First off, what's your reaction to the two big announcements from the Finance Minister today? One, that the banks are going to offer mortgage holidays, and also this, well, it's a kind of underwrite scheme for small to medium businesses.
Yeah, we expected those to happen because we had seen similar moves in Australia already. So we're seeing quite a bit of, copying of policies around the countries around the world because we're all kind of figuring out how to deal with this. But I think the underlying sort of principle is there's a lot of economic anxiety for people, right? We've got dealing with this incredible period where nobody has a rule book in terms of how to deal with it or how to understand it. We know it's going to hurt, but we don't know how much. So all the policies that we've seen in the last couple of weeks have been around how can we reduce that impact? How can we blunt the impact of this recession that is inevitably coming to us?
So this week the government almost doubled the wage subsidy package, and then we've got this announcement about the loan guarantee scheme. We've already had the $12.1 billion, business package. I mean, how long and large can they go with their spending?
Well, I think the first is around what happens if we don't do something. If we don't do anything, the cost and the consequence, both the human cost and the economic cost, would be enormous. So it makes more sense for us to borrow money and to invest in the economy and to try and blunt the impact as much as possible. But roughly speaking, we probably have around $60 billion worth of borrowing capacity. That's roughly what we can borrow without running into problems in raising money and all those other bits and pieces. But that's not a hard and fast rule. We're living in a period of extreme uncertainty in global financial markets. And if you look forward 1 month, 2 months, and this keeps going and the global economy is still weak, we know that we're going to have to think of some other ways of doing it. Essentially, we might have to think about the Reserve Bank printing money to buy government debt.
Just on the subject of the length of this, the 6-month mortgage holiday, do you think that's long enough?
Well, everything that we're seeing in terms of the announcements are relatively time limited because we want to make sure people don't get the wrong idea in terms of free money.
Yep.
But we will see them extended over time if the economic situation gets worse. And that's what we saw with the wage subsidy program, for example. It started with some limitations. And as we went into the lockdown, it was very clear that we had to increase the limit or get rid of the limit because otherwise there'll be so many people who would be affected by loss of income and huge amounts of anxiety during this 4 weeks of lockdown.
So people who are wage earners, can they expect to remain on normal pay for the foreseeable future, or should they be expecting pay cuts, or what is the lay of the land?
So the subsidy itself is limited in terms of it's capped at how much the rate is. And so that the rate is good enough for, especially in retail, hospitality, those kinds of industries. But for highly paid professions, it's not going to cut it. But also at the same time, these highly paid workers should have sufficient reserves to be able to deal with the impact, as well as the businesses that we're dealing with. So the wage subsidy is not going to replace all the income that we would have seen during this lockdown period, but it certainly gives a lot of cash flow because we're asking businesses to essentially not trade. And that's why the support from the lending packages, particularly for the SMEs, is so important. Because we know that the SMEs are most vulnerable. They tend to operate in very small margins, and a small drop in sales can be catastrophic in terms of their business survival.
And so that's great if those small and medium-sized businesses can keep going as a result of this, keep employing people and keep paying them. But I'm wondering, with people who maybe lose their jobs or reduce their hours, they're still having the same expenses in the sense that if they're renters, they've got a freeze on rent, but they've still got to cover their rent, put food on the table, power and all the rest of it. Can we expect that pressure might be going on some of those service providers to offer cheaper rates?
Yeah, I think we're going to see quite a lot of pressure in terms of how do we deal with those people who are going to be affected by it, because people will be. And I think the first port of call should be our welfare system, and they have done this already, essentially saying that if you're an existing beneficiary, about 300,000 people, we're not going to bother you too much during this period. we're going to deal with all the new people who are going to have issues. And we do have a pretty good system in terms of things like accommodation supplements, temporary accommodation supplements, emergency grants. So there are ways that our welfare system can kick into action to deal with some of this. It's not going to be perfect, but the alternative of not shutting the country down and having the disease ripping through the country is so much worse.
In terms of the economics of this bigger picture, what's it going to mean for the economy? When I spoke to you last time around this, you were saying maybe we could expect unemployment to go from about 4% knocking up towards the high 6%, maybe 7%. What's your expectations now?
The world has changed a lot. So,
In a
I've
week.
been working through industry by industry to get a sense of what the downside could be. And, it's very easy to be quite pessimistic. So when I'm looking at other countries that are doing this analysis, they're saying maybe somewhere between 10 and 30%. So we're talking about very, very large numbers in terms of how quickly this economic story has changed. But I'd caution that we're in a slightly different situation than a lot of other countries in that because we're an island nation and we're able to shut off our borders, if we can deal with the virus and the infection and get it under control, we can at least resume quite a lot of our economy once that's passed. Whereas in other places like Europe, the risks of the shutdown lingering until a vaccine is there is much higher.
So that is a big range, 10 to 30% unemployment. Where would you think we might land?
Well, let's put it this way. If we lose the jobs in tourism, that in itself is enough for us to reach 10% unemployment rate. So we are talking about things that are really out of the realm of what we've dealt with before. And that's why we want to have a short, sharp shock that is really as short as possible so that once we come out of it, we still have the businesses and still have the jobs. To give you a bit of context, today, the traffic in Auckland was down by 50%. So people are traveling less. If you look at what's happening with things like job ads, what's happening with the way that we are, how businesses are behaving, all these things have slowed very sharply. The really critical thing for us is how can we make sure that those businesses and jobs, as many of them as possible, are still there in 4 weeks' time.
Again, last time we talked, some of the banks were anticipating a shrink of 3% in growth over the first 2 or 3 quarters, I think it was. Would you like to hazard a guess of where we're headed in terms of that?
Oh, it's very hard to put numbers on this stuff, right? And the reason why it's hard is because we have no data on how the economy was tracking in the beginning of this virus and where we are now. So we're trying to get as much real-time data as possible, and we haven't yet seen a slump in terms of things like consumer spending and those bits and pieces. So, I think our base case should be that the first half of this year is going to be extremely painful. We are going to see a lot of poor, vulnerable people who are going to lose their jobs, and we are going to experience something that we haven't experienced in our living memory.
Thank you for joining us this evening. That is economist Shamubeel Eaqub.